All right, end of the week. 4 more days left in May. We've got a long weekend coming up, and the market did something really curious today. And I was really interested to see how it was going to end up, and I'll show you that in a minute. But basically, it went down, opened down, gap down in the morning, and then it traded up, but actually ended lower. So, what does all this mean? We're going to find out here in a minute. Uh, as always, I'm not a financial advisor. This is for educational purposes only, and you need to take responsibility for your own trades, of course. Let's jump into it and take a look at the market bias chart. Didn't do much, just kind of going sideways right now. But let's look at the S&P first and see what that looks like. All right, so here's what I'm talking about right here. Market gapped lower, hit right down to the 200-day moving average, which is where I said it probably would pull back to. It could actually fill this gap down here where this box is, but I was expecting it to at least come down to the 200. It touched it, went down to it in the morning, and then bounced higher, but not only ended lower than yesterday, but left a little gap right there too. So what does all of this mean? Let's look at the NASDAQ 100. NASDAQ 100, same thing. Didn't get to the 200 though. NASDAQ 100, look at how symmetrical this rollover is. So this is just in a slow motion rollover. Could actually start to accelerate to the downside. So we have to be a little careful here. Same thing happened today. It gapped lower. It traded higher during the day, but ended lower than yesterday. Quite a bit lower, actually. So that's what that looks like on the NASDAQ 100. Let's look at Bitcoin. Bitcoin pullback, not surprising after a pretty good run. It basically, that's a lot of profit taking right there. We'll see how much more it comes back. It does have a golden cross now, where the 50-day has crossed the 200-day. But the momentum, here's the RSI, relative strength, very overbought. So usually it pulls back when that happens. And we'll see how far it will go. I think probably this 106 level needs to be really serious support for this. So it's at 108 right now and down 3,000 today. So it could blow through that support area and get right back down here into this box again. So we'll continue to watch it. Volume wasn't too bad though today, even with this big sell-off. Volume was about average. The two big days were above average volume. So I think that looks like just profit taking at this point. All right, let's take a look at all the updates because it is Friday. So lots of things I updated on the website on the front page, which is available to anybody. Don't need a subscription for this. This is the secular bull market. So you can see it was updated as of May 23rd. That's today. We are in this green secular bull. Secular bulls typically last 18 to 20 years. And they come to an end when these indicators fall below these key levels. This pink line here for the relative strength, for the momentum, the MACD below the zero line, and below the 200-week moving average. And none of those have happened yet, even though we do have a negative divergence. Going all the way back here to 2018, actually, we have a negative divergence with price. However, it needs to go, it's got a long way to go before this secular bull ends. And the secular bull, if it does last 18 to 20 years, should run until somewhere in this neighborhood, 2029 to 2033. So you can see where we are as of today. We actually have a blue bar. Now this is a monthly chart, so this bar will not complete until the end of next week. And we'll see what it looks like once we get there. But right now, we have this big, huge down trend right here in April. That's the whole month of April was that big red bar. Went all the way down and came all the way back again. And now we're actually trading higher than we did in April. So you can see this is starting to curl back up again. So far, the secular bull is still intact and still playing out to the upside. Let's go look at, on the charts page, we'll look at the momentum, monthly momentum indicator from John Carter. Actually, he's the one that showed this at a money show back in November. And essentially, this is a monthly chart using the squeeze on Thinkorswim. So this is a chart directly from Thinkorswim. This is the squeeze down here. Whenever it turns red, then it is winding up, building up energy, basically getting ready to explode one way or the other. So right back here, these 2 months was November and December of 21. And the market was hitting all new highs when that was happening. You can see momentum is starting to decline. That's why it's dark blue. Same thing happened right here in December and January. We hit all new highs during those months, and momentum was starting to decline. Right now, we're at this red arrow. So this is the one from back here in 22. We had a long bear market. And this is where we are right now. So it's still looking similar to 22. We'll see if it will continue that way. Here's the ADX line now starting to curl back up again. Now that did not happen in 22 until way over here. We had already started to recover back here. Actually, it was in 23, March, April, May, pretty much May of 23, when the ADX crossed back, the green crossed back above the red. That actually could happen next month. We'll see it. I mean, it has not happened yet, so we have to be careful. Can't get ahead of ourselves. But we'll continue to take a look at that. And this is updated every week on the website. Also, these are monthly charts as well. So these are the indexes, including Bitcoin and gold. And they are relative strength, with the strongest one in the upper left and the weakest one in the lower right. So the Dow is the weakest, and Bitcoin, of course, is the strongest. Gold has pulled back. Gold actually was number 2, I think, last week. NASDAQ 100 is number 2 this week. So gold's pulled way back over here. Same thing for the aggressive sectors. Same kind of thing with a monthly chart based on relative strength. So industrials, I mentioned this earlier today. Anyone that watched the midday update, I'm going to try to do that each day. I'm going to try to make it much more concise. I spent way too much time today, 10 whole minutes. So that's twice as much as I want. So I'm going to be very concise and do very specific things on that update. So stay tuned on that one. Communication services and technology, these are the two most aggressive, and of the aggressives, they are near the top. You can also look at the defensive sectors right here. And of the defensive sectors, the strongest one is utilities, the weakest one is healthcare. And that has really played out. You really can see it this week. Healthcare, actually this whole month, healthcare stocks have just really been beaten down the whole month. But these are all of the defensive areas: utilities, staples, and real estate, the most defensive. And then materials, of course, is gold, where gold is. So that's what those look like. And then I did add one in here to show everything together, all sectors and indexes combined. So now everything is, all of those are together. And now out of everything, you can see industrials is the strongest of everything, even including Bitcoin. Stronger than Bitcoin, stronger than gold, stronger than every other sector, stronger than the indexes. So here's the NASDAQ 100, here's the S&P. So industrials is the strongest of all of them. And again, healthcare in the bottom right is the weakest. Gold actually is the second weakest right now. So these are updated every week on the website if you just want to get a sense for where things are. These are monthly charts, remember, so they don't complete until next Friday. And then we'll see what they look like next Friday. All right. One thing I'll point out on the portfolios page, anyone that's keeping track of this market timing system, the it is still long, even though it is pulled back quite a bit. This was up to almost 6% at one point. And if you're doing the triple, this was up to about 18%, but it's pulled back now to 2.9, but it has not yet given a sell signal, either on the weekly or the daily. Although the early signal just turned bearish on the daily. So you can always look at the charts right here. Here's the weekly. The bullish signal, long-term bullish signal, is when the 21 crosses the 50. And 21 is 280.07, and the 50 is 280.47. So it needs to go up about 41 points for that to give a bearish signal. And actually, this arrow should not be here. It went above it briefly one day this week, but today is the end of the week. So that's the actual official view right there. And then you can also look at the daily in the same way. And you can see the daily now has an early warning signal right there. It has not given any other bearish signals. Doesn't have a short-term bearish yet, even though the ADX is getting ready to cross. So this could continue to come down. So again, it's very odd the way that the markets look right now, because they went up. There was lots of buying most of the day. In fact, if we look at the 10-minute chart, you'll see what I mean. Here's the 10-minute charts right here. So big, huge gap down, then buying most of the day, and then starting at right about 2 o'clock, started to roll over. Now, I did the midday update right around 1:30, so it had not yet started to roll over, but it is rolling over now and starting to head down. So, and you can see these are all the aggressive sectors in here. They're starting to decline as well. So that indicates this is technology versus the S&P. So that indicates rotation out of technology. In fact, all the way back here to last week, it's been trending lower, discretionary trending lower. Communication services, the one that's starting to move higher, but kind of flat today. But here's industrials. I showed that before. Industrials is doing really well. If we look at the defensive sectors, however, you can see staples since last week is moving higher. Utilities since last week is moving higher. There's materials since last week, it's moving higher. So that shows you rotation out of those aggressive sectors and into the defensive sectors, but not in a big way, just a little bit of rotation right now. One other way you can do that is on the sector charts here, which also get updated each week. And I like to start about 6 months back. So if we look at 6 months ago, the one highlighted is the S&P. So anything above that is outperforming the S&P. And you can see technologies in there, NASDAQ 100, communication services, Bitcoin and gold, of course. Last 6 months have been doing really well. Gold in particular is up 21% in the last 6 months. But those are all the ones that are outperforming the S&P, and underperforming consumer discretionary, which is an aggressive sector, just barely underperforming. And then the Russell 2000 all the way down there. So then if we go up to 3 months, bring it in a little closer to now you can see S&P down here. The underperformers, healthcare, of course, energy, and the Russell, but everything above it, is outperforming for the last 3 months. So the last 3 months actually has been pretty strong. Next is 1 month ago, getting a little closer to the current time frame. So here's the S&P over 1 month, communication services, discretionary, and technology, and NASDAQ 100 and Bitcoin, basically all of the aggressive sectors. The last month, aggressive has been outperforming defensive. So it's really clear just in the last month, the market has been in a risk on mode. And then if we go to 1 week, for the last week, now you can see Bitcoin and gold, of course, once again, outperforming at the top. And then we've got staples, utilities, materials, the 3 defensive sectors. Communication services and NASDAQ 100 are aggressive. but mostly defensive. Industrials, of course, has been outperforming through this whole period, and healthcare now is moving up and outperforming the S&P just in the last week. So this is clearly showing, if you look at just 1 month ago, what it looks like versus just 1 week ago, it's pretty clear, I think, that the rotation is starting to take place out of aggressive and into defensive. And then finally, if we just look at today, everything above the S&P, outperforming the S&P, utilities, staples, energy, real estate, healthcare, materials, all defensive areas just for today, all defensive areas. So this is what I mean. It's very curious what happened today. Big gap down and then buying throughout the day, but still not being able to recover back to the previous high. So that's something that we really need to keep an eye on and watch that. So it looks to me like a lot of those defensive sectors are starting to have some buying going on. Up here, these are the green ones are the top 10 in the top 10 industry groups for the week. These have been updated today. And the red ones are the bottom 10. And you can see renewable energy, computer hardware. Apple, in fact, if we click on this little box right here, it will show you all the stocks in these. I suspect Apple will be in here somewhere. So this is just for today. Interestingly, Rigetti Computing was near the top. I showed you this earlier. That was a short squeeze stock a couple of days ago. But let's look at the whole week. So here's for 1 week. And let's look at the bottom. SMCI is at the bottom and Apple down at the bottom. So for the week, Apple's lost 7.5%. SMCI's lost 13%. So that gives you a sense for, Apple, Trump threatened Apple with a company-specific tariff. I'm not even sure if that's possible. But saying that he expects Apple to build all of their iPhones in the US. I'm not sure that that is doable or even reasonable, but that sent Apple quite a bit lower. If we look at the chart for Apple, see what it looks like. So right here, heading lower. It's been heading lower for quite a while. If we look at it on a longer term basis, you can see it is definitely in a downtrend. It's below the clouds, below the 200-day. Everything continues to move lower for Apple. And this is a weekly chart. So starting back here, actually the end of last year is when that began. And then this is a monthly chart where it shows you right here, Apple for the last 2 months has getting ready to actually, if it goes below this 200-week moving average right here, that is not going to be very good for Apple. But everything looks pretty bearish right now. All right, let's go back here and look at see what the positive ones were. Tobacco, non-durable household, coal, tires, mining. So all of the gold minings are starting to make a comeback again. By the way, these mining and gold mining were in the bottom 10 last week. So this week they're back up in the top 10. So that's what those look like. You can check out any of the stocks in any one of these industry groups just by clicking on the little box next to it. So here are the winners today for renewable energy just for the day. Solar Edge made a comeback today. And if we look at it for the week, now you can see fuel cell is actually did really well this week, up 33%. Only a $5 stock, so it was up $1.36, up 33%. What was it just for the day? Out of curiosity, up almost 20% just for today. Solar Edge was up almost 12%. Enphase. So these are the ones that were up this week, or just today. And if we look at for the whole week, we can look at the ones that have been. Solar Edge for the week has lost 24%. Yeah, for the day it did really well, but for the week it's lost 24%. So that's what that looks like. Here's First Solar down here, down 11%. So renewable energy is a really, really tough one to trade. It has not been doing very well. It can get a really good bounce, but go right back down again. All right, the last thing that gets updated every week that I'll show you is on the market bias matrix page at the very bottom. I show the top 20 winners and losers. These are the large cap at the top. So top 20, these are year to date as well. It's all updated as of today. So the top 20, you can see Palantir remains up there in the top. NRG has just taken over the top spot. Palantir was number one last week. But Philip Morris, Uber is in there, Mosaic, Zscaler, GE, CVS, CrowdStrike, Netflix, SMCI still in the top 20 year to date. So this is interesting just to take a look at this every week, see what's in there. And you can see the ones in the bottom of the list. The very bottom is Deckers, down 50% for the year. NRG is up 76% year to date. NRG has been one of our top 10 stocks for quite a few weeks running, by the way. Marvell, number 2 worst performer, down 45% for the year. There's Enphase, Dow's down here, Norwegian, Moderna. So those are all here's United Healthcare right there, down 41% for the year. Then down here are the small and mid caps, HIMS, the big performer, and you can Duolingo. These have all been up here for quite a while. Nextracker is up 53% for the year. And these are the losers on the right-hand side over here. So it's interesting to take a look at these to see what they're doing, see which ones are performing and which ones aren't. On the charts page, I update the top 10 lists usually on Saturday morning. And you can see over here, this is from last week. So NRG right here was brand new to the relative outperformers. So the top 10 in this list have to outperform their own industry group by 10% or more, and they have to outperform the S&P by 7% or more. So they have to satisfy both of those criteria in order to make the list. And these are the top 10. These are the ones that have beat earnings and revenue, and these are over here are the IBD top 50. And then down here are the large cap, the mid caps. There's Nextracker, number 2 out of all mid cap stocks. There's an FG, and then in the small cap stocks, HIMS, number 1 out of all small caps. Solar Edge was on here, but last week, but I doubt that it will be this week. Likely is going to fall off the list. So this is also a good thing to just check out at the end of each week, just as you do your end of week review of the market. This is a good place to come and just take a look at some of these. You can actually just click on any of the ones that just made the list and see what the chart looks like. So Nutex Health right here. This is actually the IBD chart, just the same way that IBD does it, except with colored bars instead of black bars. So you can see right here how it's just continually goes up, pulls back, goes higher, pulls back, goes higher. So that's the kind of chart you like to see. And that's what most of these charts in the top 10 usually will show you. All right, finally, let's do a daily scan. This is something that I will do on the midday. I forgot to do it today, but I want to try to make sure to do the daily scan for at least the optionable stocks that are bullish. Let's see if we have any. We've got Coca-Cola, Mondelez, Spotify. So the criteria for this is that they have a low or a close from yesterday below the 21, and today it's closing above the 21. So Spotify actually looks pretty strong right now. And then oil's heading up as well. All right, let's take a look at the bearish side of this. We might get more stocks on the bearish side. Yeah, we've got 10 of them now. So Salesforce is a bear. You can see that rolling over right there. Let me see if I can make this a little bit more apparent. So there's CRM, there's Lucid, MicroStrategy following along with Bitcoin, of course, Tapestry. All these look very similar. Take Two, Unity, Workday just reported yesterday, I think. So Workday, big sell-off on Workday, actually below the 50-day right now. Yeah, so they just reported yesterday. So lots of bear. These all have weekly options, by the way. That's why it's called the optionable ones. If we look at all of the stocks, this is basically the top 10 list that I showed you before. Now we can see there's Coca-Cola again, so it's confirming. We have a gold stock, Harmony, starting to move back up. Centerpoint Energy, there's an energy stock, bucking the trend of energy. Actually, momentum down here on the squeeze chart is starting to move higher. So that's interesting. Mondelez, these may or may not have options, by the way. Let's see if Coca-Cola, I know, should have options. Yeah, it doesn't really say up here. Let's see. Okay, there we go. Yes, options up here, yes. So this shows the yield, the annual dividend right at the top, and when the earnings dates are. It's a nice thing about stock charts. It gives you all that information right at your fingertips. Very easy to see. CNP Energy is also optionable. So a lot of these have already reported. So you can see the yield is 2 and 2.34. Mondelez, let's look at that one, optionable. And let's real quick look at the bearish side and see if there's anything there. 16 of them over there. Abbott Labs, bearish, heading down. Burlington Stores, big downtrend. Not sure what happened today with them. Copart, huge day. They had earnings. Looks like they missed earnings yesterday. There's MicroStrategy again, making the list twice. Viasat, ugly looking chart. Vital. Viasat, by the way, came up, tried to get through the 200-day, got rejected twice, so it's heading back down. So those are good ones to use put options on for those that do options. All right, that's it for today. Thanks for watching. I hope everyone has a great weekend. We'll see what happens next week. Actually, let's take a look real quick. Here's next week from Stock Traders Almanac. I will update. I think they probably have the June chart out there by now. I like to put the weeks in and then the events that are coming up. So I add those onto their chart. So right now we've got 4 days left in May. Holiday weekend, so no trading on Monday. But that's what it looks like in general. Historically, it's overall looks like a bullish week going into next week. And this is what it looks like. This really brings home what I said at the very beginning of this, where the market sold off and actually gapped down, and then we had buying all day long. So it felt like everything was coming back. But if you just look at the candles, you just see a bunch of white candles, which are bullish candles, but they did not get back to yesterday's close. And putting it on a line graph like this really highlights it. So this is where we were in 2018, and we may be diverging from the 2018 graph now. If this continues to go lower, and I mentioned this before, that 2018, this was at the end of the year. Actually, the end of the year was here, and this is the beginning of the new year. So that's usually a very bullish period, as opposed to now, where we're coming into the end of May, which is normally bullish, but the beginning of June is usually bearish. So this might be diverging now from the 2018 chart. We'll continue to watch this and see what it looks like and see if it gives us any clues. All right, thanks for watching. Please like and share. Give me any comments. Let me know if there's something you want me to take a look at. And for those that are interested, I will be doing a Zoom call tomorrow for subscribers. So if you want to subscribe, you'll be able to just click on this little button right here at the top of the homepage, and it will take you right over here. This page, webinars and videos and newsletters, is for subscribers only. But this is how you can join the Zoom call at 1 o'clock tomorrow. I know it is a holiday weekend, so I'm not sure what the attendance might be, but it's the only time I can do it, probably for the next few weeks. So figured I'd give it a shot, see what happens. All right, thanks for watching, everyone. Have a nice weekend, and no trading on Monday. So I will talk to you again Tuesday. Take care.